Are you thinking about spending $150 a month on the Trade with Maya bot? Well, before you risk your own capital, you need to see the actual retail execution. Here you will find no affiliate links, no marketing hype, just my independent real money broker logs and the raw friction data. So let's jump right into the sheet and look at what this week's results are. Welcome back to our live account review of Trading with Maya. Today I wanted to start out with giving you access or showing you how to get to a link where you can go directly and look at the equity curve so that you can, anytime during the week, if you don't want to wait for the video, just kind of see where we're at and what's going on. So if you go to our website here, Keystone Strategy Trading, and you go to Options Trading and then Option Trading Bots. And by the way, we are looking for an additional bot to track. So if you have any ideas of what you think we might ought to look at next, we're happy to review those and see if it's something that we think might fit within our criteria for reviewing a bot. But anyway, click on Trade with Maya, and then you'll see here's the page that we've created for Maya. Here's where you can see all the videos, and here is where you can go directly to the equity curve. So if you click on that, then you get this view of the equity curve and some additional metrics. So I just want to make that available to you and show you how to get there. So now we're going to switch over and dive into this week's review of what we've discovered. So let me switch the screen over for you. I wanted to start out this week's review with an update from what we discovered last week. Last week in our review, we realized that when Maya was reporting $1 wide, their contract size went from 1 contract to 5 contracts. Because on a $5 wide, they're looking to collect $250. And when they're doing a $1 wide, they would collect $50. But to get the position to be a similar size, they would do 5 contracts. So the risk was the same, and their targets for profit was the same. But they had to do 5 contracts in order to do that on a $1 wide trade. When this happened, they did not report they had 5 contracts on their P&L. They reported as if it was 1 contract. So they were understating their profits on profitable months, typically, when they had five contracts for a $1 wide. And they were understating their losses and their drawdowns. So on the months where they were profitable and they had more winning trades than losing trades, they were understating their profits, which was good because you'd rather be understating it than overstating it. However, in the drawdowns, they were understating the drawdowns. So we sent a message to Maya, and they came back and said, yes, they did see they had a problem, and they corrected it last week. If you can recall, on July, we had about, I believe it was around $800 loss in July. There have been some additional trades closed out, which increased the loss. But in addition to that, they recalculated some of the losses on the positions that had 5 contracts so that it made it much larger. And what we're seeing is now in our tracking, we're getting much closer. So let me switch over to that spreadsheet and we can see how we are now tracking a lot closer to what their website says. All right, so let me switch this over to that. This is the spreadsheet that we looked at last week, and we identified there that whenever we had a quantity of 5 contracts, our number was vastly different, $100 to $120 or $30 difference. So now this week, after Maya has restated their positions and their P&L for contracts that had, for positions that had 5 contracts, we're now seeing these are much closer and more in line with what we expect. We're still seeing some differences here, which we would kind of expect to not get exact fills. But when the difference was several $100s, and now if I total this up, it's only about $28 difference. So in some cases we do a little better than Maya. Like here we did $37 better. Here we did $8 worse. So now the total over time has gotten a lot narrower and the reporting seems to be more accurate to us. So we're much happier with what we're seeing now. The other thing that we discussed earlier was that we were concerned about getting filled on, not getting filled on some of the limit orders where Maya shows they got filled and we did not. So what I'm going to do is, if you see here, this column here shows that we matched. So I'm going to do all of the trades, even if we don't match, and that will show the trades where Maya got filled and we did not. So I'll switch this over to say all trades, and then we'll scroll back down to here and we'll see what we got. Now, there are some trades down here that have not closed out at all, so we're not going to look at those, but the ones that have closed out here, we're going to take a look at these by expiration. So on this expiration here, the difference is not as significant, even though we did have one order that we did not get filled on. And that's because they only closed it out for a loss of 25, so it was only a $25 difference. Now where it starts to become more significant is when we look at the next expiration, and you can see here, let's get all of the expiration in there. You can see that we have a couple of more of these where the quantity was 5. On this one, we matched up, and so we have a similar P&L. It's only a $2 difference. But on the ones where we didn't get filled, you can see that it starts to become a little more significant here. And if I total up just this expiration, that totals up to showing that we are actually doing $336 better than Maya, when in actuality, the reason is that we didn't get filled on a losing trade. So back to our concern is that on the months where Maya's profitable and we would be profitable as well, we are likely going to miss out on some of those profits where we don't get filled. We will say that lately we have not seen as much of that where we're not getting filled on trades. And it does seem to be always on the SPY or the QQQ where we're having issues with that. So anyway, so that's an update on where we see the differences that were so vastly different from Maya based on the reporting. So we're real happy that they were able to update the reporting, and now we're much closer in line. So next I'm going to switch over to looking at just the Keystone account, and we'll take a look at our drawdown and our max drawdown. So let me switch you over to that real quick. What we're looking at now is the spreadsheet that we use to track all of our trades in our live account. Our live account is at Tasty Trade. We started out with 30K. Now we're sitting at 27,942. So we still have not come out and created a new equity high. We haven't gone above the original 30K at all. So that's kind of the bad news. Additional bad news is our max drawdown increased, or decreased, if you will, down to 8.78. Maybe some good news is that the current drawdown is not at the very peak right now. With the closed out trades, we're sitting at 8.13%. And if you look at our open P&L, if we factor that in as well, we're sitting at 6.86%. So the good news, I would say right now, if we're going to try to see something and be optimistic about where we are, the open positions that we have right now predominantly are in the money, and in the money is what we need to be profitable. Right now we only have 2 that are not in the money. We are a little bit concerned about one thing that Maya's doing that we're a little bit concerned about is we are very heavily invested in gold right now. We have quite a few positions in gold that most of them are not in the money. I think 1 or 2 of them are in the money when gold, I guess, perked up a little bit this week. So that's kind of another concern that we're starting to watch and wonder about. But we are optimistic that this week we might be able to click off some more winners. And if the market kind of stabilizes a little bit, we can see that there's a potential Maya could pull out of this. So anyway, thanks for watching. We hope to see you next week. And please share this with anybody you think that might be interested. It is the kind of thing that we would have liked to have seen when we were, reviewing or looking at different subscription-based services. So we think this is valuable, and we hope it is valuable to you. So please share it with anybody you think that might be interested. Again, thanks for watching, and we'll see you next week.
Thanks for watching. If you're interested in learning more, have any questions for us? Please visit our website at keystonestrategytrading.com.